What is my prediction for the real estate market in 2023? If you want to know my thoughts, stick around. Hey guys, Cody from The Clever Investor back again, and today we're going to be talking about what my prediction is for the real estate market in 2023. All right, in order to predict where I think things are going, we got to kind of look at what's going on in the headlines and in the market currently. Now, did you know that December is usually the second highest month for job cuts, the second highest month? So much for the holiday spirit out there. As you've likely seen, layoffs have been the rage lately in tech and in the media industries. Even social media giants like Facebook and Twitter continue to make headlines because they're letting a lot of workers go. The financial industries, they're following suit in preparation for a potential economic downturn. Goldman Sachs Group, Morgan Stanley, Credit Suisse Group, AG, some of the financial giants, they're handing out pink slips this month, so they're letting people go. Hey, but here's the good news. Not everybody is in on the layoff action. The Labor Department reports initial jobless claims fell by 20,000 to a seasonally adjusted 211,000 last week, their lowest level since September. All right, so were you wondering, by the way, which is the #1 month for the most job cuts? It's January. Happy New Year's, everybody. The post-Christmas, let's cut cost and reboot our business this year and make sure that we're being financially responsible mentality, it makes, a good month to clear out cubicles. So brace yourself for more layoff headlines to come. So what does this mean for real estate investors? If people are busy looking, fearing for their jobs, they probably are not going to make any big moves soon. Some may actually be thinking about downsizing or turning from a homeowner to a renter and trying to figure out how they're going to afford the rising cost of pretty much everything. Home buying is likely going to continue to slow. The demand for apartments and rental homes, that's going to stay high, allowing landlords in certain markets to continue to raise rents. Now, the price of homes is probably going to slow. It's going to decline in some areas, but a significant dip in home prices nationwide probably isn't going to happen. It's going to be market by market due to still there being a shortage of properties for sale. Now, in other headlines, there was a rate hike recently. It just was a lower rate hike than we were thinking it was going to be. This week, the Federal Reserve got together one last time for 2022 in a move that surprised just about no one. They raised the borrowing rate again by 0.5. We all thought it might be 0.75. Which we were used to. So there is a little silver lining out there, I guess, but 0.5 is still a lot. Along with the increase also came an indication that officials expect to keep raising rates through at least the beginning of the next year. So we're going to have to wait till maybe 2024 to start seeing that go back down. Now, one of the other things I pay attention to is what are the REITs doing? Okay, and right now they're having a great REIT pullout. What that means is REITs, which, there's these high interest rates right now. It's shaking up the real estate industry. Well, real estate investment trusts, they're called REITs. There are companies that own, operate, and finance income-producing real estate. And they're like giant funds, right? And they buy these income-producing properties. And a lot of everyday people and different insurance companies and things can invest in these REITs, and everybody can benefit from investing in real estate without actually having to buy the real estate themselves. Well, quite a few people are passing on that opportunity right now. In Q3, non-traded REITs paid out $3.7 billion to investors pulling out their funds. Okay, this is 12 times more than people pulling out their funds Q3 of last year. All right, so more people are taking their money out of REITs. All right, we're also seeing massive amounts of global growth slowing down in 2023. Last week, I read an article from Wells Fargo where they announced that the global economy predictions for 2023, they expect that everything's going to grow at a much slower pace. In 2022, 2.4% was the estimated rise in the global economy. Next year's prediction was lowered to 1.7. So that's what it is. People all across the world are slowing down. Now, closer to home, the banks predicted a modest U.S. recession, whatever that means, beginning in mid-2023. So according to Wells Fargo, we're going to be in a mild recession somewhere mid next year. Growth is expected to be at 0.2% by the end of 2023. This is way down for the 2% that they were estimating at the beginning of 2022. So a slowing economy can mean fewer jobs. We're talking about declining property sales, shrinking profit margins. The REITs, people are scared. They're pulling their money out of their REITs. They're pulling money out of crypto. They're pulling money out of the stock market. People are scared. That's what I'm getting at. So plan accordingly. But on the bright side, okay, they are tampering down inflation a little bit, right? They are predicting that because of all these rate hikes, that they're going to be able to bring inflation down to like 3.8%, okay? From 7.7 down to 3.8. So here's my predictions for 2023 in real estate. Interest rates are going to continue to rise. We've never seen it like this before, all right? We are combating 40-year high inflation. We are trying to put the brakes on inflation, so they're pumping the brakes on the real estate market. Mortgage rates have risen to 20-year highs, making home ownership affordable for pretty much everybody who doesn't make at least $150,000 a year or more. Mortgage applications are at their lowest level since 1997. As a result, I expect home prices to continue to decline in certain markets throughout the rest of next year. Some will be moderate, some will be massive, okay? Certain markets like Arizona, we're going to get hit pretty hard. It's probably going to go down 20, 25, 30% next year. That's just because fewer people are buying homes. They can't afford them. The interest rates are too high. Until those come down, it just is what it is. Now, the demand for rental real estate is going to grow in many areas of the country. So this is a great time to do creative finance and get into rental real estate. And if you can bypass the banks, take over a 2 or 3, maybe even a 4% mortgage by using seller financing or using a wraparound mortgage or a sub-2 transaction or even a master lease option, get control of rental real estate because the people that can't afford or as they're losing their jobs are going to move over to renting, right? It's a good time to own apartments. It's a good time to own rental real estate as long as you're not getting into them expecting appreciation or expecting or allowing the financing to screw up your cash flow, all right? Commercial property owners, they are raising their rates to address the higher demand and the higher costs associated with owning the properties. So commercial's kind of crazy right now, but there's still a lot of great opportunities out there. And I believe that in multifamily and commercial, if you were to bet big on some of those and you can find some distressed assets, which there's going to be a lot more distressed assets, you're probably going to do pretty well in the long run. Now, listen, guys, I know this is a lot of info to take in, so let me just summarize this for you and end this video strong, because I'm just like spitting headlines and facts and stats at you. Wherever there is turmoil, wherever there is pain, wherever there is change or fear or uncertainty, there's massive opportunity. And you got to make a choice, because some of you guys watch these videos and you're like stuck in the education world thinking that you're going to watch videos and learn real estate. That's not how it works. You got to get out of the classroom and into the real world. You got to get on the phones. You got to go sit down at kitchen tables. You got to talk to the agents. You got to network like crazy and put your feelers out there constantly and try to generate activity. The people that raise their intention, their enthusiasm, increase their skills and capabilities, and lean in on 2023 are going to make a freaking fortune. Everybody else is going to get ran over financially. Job losses, fear, uncertainty, more foreclosures are going to be hitting the market. The interest rate environment's not going to get better anytime soon. So instead of worrying about all the things you can't control and all the stressors that are out there, instead focus on the things you can do, which is increase skills and capabilities, get on the phones, make offers, talk to people, analyze deals, find partnerships, raise capital, do everything you can to generate business. If you do that by the end of 2023, it'll be the best year of your life that you've ever had financially. I can guarantee it. Because this is the story of haves and have-nots. Which one are you? We shall see. If you need my help, down in the description down below is a bunch of links to download free stuff, get involved in courses. I have some software down there, some data down there, things that will help you be a more successful real estate investor and also live that real estate investor lifestyle. Click those links, take advantage of some of my free stuff, maybe grab my software, the Deal Automator. I think it'll really help you organize your business in the cloud. The data's in there, the marketing piece is in there, the contracts are in there, the forms, everything I use, and me and my team, we're at scale, we all use the Deal Automator to run our businesses, and I think it would help you out in a major way. So find that link down there, click it, and make sure you drop me a comment if you got something from this video. That's all I have for you for now. Till next time, I'm Cody Spurr, the Clever Investor, signing off for now. Take care, comb your hair, we out.